Good morning and welcome. You're tuned into Market Cafe with me, Lisa Fernandez, and I'm co-anchor with me, Snehi Shah. Good morning, Snehi.
Good morning, Lisa.
Well, and during the course of the next 1 hour, we take you through what's trending on the international as well as the domestic front. But let's get started with the international market that Snehi has tracked very closely. Snehi, what's the international market handover coming in like?
Absolutely, Lisa. So wishing you a good morning and a very happy Friday to all our viewers as well. Let's kickstart the show with the global handover. And let's start by looking at what the moves are on Wall Street now. Very flat moves coming in from Wall Street. Not much action when it comes to that intraday trading session. US stock futures were little changed on Thursday night as traders awaited Friday's jobs report. Now, Wall Street is coming off a muted session on Thursday, largely flat moves. Dow was lower by almost 10 points or 0.03%. The S&P 500 and the Nasdaq also each declined just 0.1%. So, well, very flat moves, not doing much. Now, these moves come as investors await the September's jobs report. Now, economists polled by Dow Jones are expecting the US economy to have added 170,000 jobs last month, down from that 187,000 mark. That was the number the prior month. And the unemployment rate is, however, expected to have fallen to 3.7%, lower than the 3.8% level in the previous reading. Now, many market participants are hoping a somewhat softer jobs report will break the fever in bond yields, which have risen sharply and weighed on the equities. Now, the 10-year US Treasury yield hit a 16-year high this week, rising as much as 4.884%. Now, it had last hovered above 4.7% mark and has now seen a spike. So there's volatility in the bond market. So the jobs report is going to have a significant impact on which way the market is going to move, because remember, a volatile nature in fixed income, that's an uncomfortable place for investors to be in. Now, when we look at it from a weekly basis, the Dow turned negative on the year this week and it's headed for its third straight week of losses. As of Thursday's close, the 30 stock index is down by 1.1%. The S&P 500 is also on pace for a fifth consecutive losing week, down by 0.7%. And when we talk about Nasdaq on a weekly basis, it is coming absolutely flat. So, well, flat moves when it comes to Wall Street on intraday basis yesterday, and on a weekly basis, other than Dow, the other two are holding well but flat nonetheless. Shifting focus to Europe, then the European stocks closed higher on Thursday after US Treasury yields pulled back following weaker than expected jobs data. The stock 600 index closed with an uptick of 0.3% after three negative sessions. So finally, some positivity coming there, although mild, still some positivity. Sectors were mixed, with travel stocks up 1.5% and oil and gas stocks were slightly lower. FTSE was also up 0.5%. On the other hand, you had DAX that was down 0.2%. So, well, this is what the handover is looking like globally, Lisa, on the equities front. But take us through what crude and other commodities also did.
Yes, crude prices are extending decline on this day as well, because it showed a decline of around 5%, and after this previous decline, crude prices, they fell by another 2%, and they are rapidly showing a decline that is on the back of demand concerns. Now, on the back of OPEC meet, which happened a few days back, the supply cut that stance remains. So usually in such cases, the prices should actually remain stable. But because of the demand concerns, that has overpowered the supply woes. And EIA inventory data that show that US gasoline demand that has to its lowest level in 25 years. The US service sector, that also has slowed down, and also the oil prices that remained expensive, and because of that there were demand concerns owing to the dollar index, which still remains near the 11-month high. So that's on the crude prices check. But as crude prices crashed, Singapore GRMs, that has fallen to the lowest level since the 7th of July. So what are the implications on sectors like refiners as well as OMC? Somit is here to take us through that. Over to you, Somit.
Well, companies like MRPL, Chennai Petro, Indian Oil Corporation, BPCL, HPCL and Reliance Industries continue to remain in focus given the fact that Singapore gross refining margin, which is the Asian benchmark for refining margin, have come down to around $4.45 per barrel, which is the lowest level that we have seen since July 7, 2023. Now, compared to its recent peak of $15.4 per barrel, the gross refining margins have declined by around 70%. Now, all product prices are down and the Behind this decline in gross refining margin could be higher Chinese exports, given the fact that there are also news reports which suggest that Russia could be easing the ban on fuel export, and also given the fact that there is a higher refined product inventory in the US market. Now, what would be the impact of this lower gross refining margin on the oil refiners? Now, generally every $1 per barrel drop in the gross refining margin impacts MRPL's revenue by around 700 odd crore rupees on an annual basis. It impacts Chennai Petro's EPS by around 30 odd %. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings by around 14 to 16 odd %, and for Reliance Industries on a consolidated basis, it lowers their earnings by around 4 to 5 odd %. However, for oil marketing companies like Indian Oil Corporation, BPCL and HPCL, there is a silver lining, and that is the fact that there is a sudden drop in crude oil prices which have led to higher marketing margins for these oil marketing companies. Now, marketing margins have revived given the fact that crude oil prices have dropped below the $85 per barrel mark from $97 that we have seen recently few days back. Now, on the back of this, the gross marketing margin for oil marketing companies on petrol have increased from 1.7 rupees to around 10 rupees per litre, and on diesel the negative margin of around 6.1 has now come down to around negative 3.5. So marketing business is reviving for the oil marketing companies, but given the fact that refining margins are declining, is the refining business that could see the impact for the oil marketing companies and other oil refiners going forward.
Well, thanks, Amit, for taking us through that. Some big impact coming for a bunch of stocks on the back of these Singapore GRMs hitting July lows. But with that, let's also listen in to Peter Maguire, who's the Chief Executive Officer at Exim Australia, on his view on where the crude prices are headed and what he sees happening with oil going ahead. So listen in to what he had to say.
As the US dollar continues to uplift, and certainly crude prices, and that's going to be strong for dollar. And I really think that that will be underpinned as far as rates as well. So you've got a very 24 is going to be dynamic. But let's get through to Christmas, because I think it's going to be some fireworks between now and then. I think over the next 6 months, I won't be surprised that 85 to say 105 is going to be the level. It's too hard to forecast if it goes much further than 105. But if you have geopolitical, you have weather outages, you have other issues that impact the market, those right of field sort of stuff, then that can have an adverse effect to price. You've had a boom. I mean, the US dollar is just, it's incredible at the moment, the strength of it. The only market that really hasn't sold off too big in commodities has been pretty much crude, though it's taken a bit of a hit in the last couple of days.
Well, that was on the crude impact. So let's let's look at what are the cues to watch out for, starting with the RBI rate decision, whether rates are likely to remain unchanged. That's definitely a key event to watch for. And on the corporate action front, Saturn Credit Care, they'll be considering fundraising plans, and Jupiter Lifeline Hospitals will be announcing their Q1 results. Veranda Learning, the lock-in opening for 20% of their holding that ends. On the other events, we have Tata Harrier as well as Safari bookings that will open today.
Well, absolutely, Lisa. All eyes will be on that MPC outcome today by the RBI. But let's shift focus to some other global stories we've been tracking for you bright and early this morning. And US weekly jobless claims has moderately increased to 207,000, while layoffs has seen a decline in September, indicating towards a still tight labour market conditions at the end of the third quarter. The trade deficit also shrank to its narrowest in almost 3 years.
And shifting gears, auto giants Hyundai as well as Kia will announce that they will be soon adopting Tesla's EV charging systems from the upcoming fourth quarter in the US. The charging tech has been gaining steam in recent months towards becoming a unified charging standard among EV makers.
Well, the US Securities and Exchanges Commission has sued ex-chief Elon Musk in an effort to compel the billionaire to testify over his purchase of Twitter last year. Broadly, the SEC has said that the case is tied to Musk's purchase of the social media platform and the stock trading surrounding this acquisition.
And Taylor Swift's Eras Tour is breaking records before it even hits theatres. With a week until the movie graces the big screen, it has surpassed $100 million worldwide in advance ticket sales. Now, do remember, these revenues encompass all the showtimes, locations as well as circuits across the globe. Swift's Concert. That film opens in theatres on 13th October.
Well, as the ICC World Cup unfolds in India, a surge in cricket ball supply is driven by the high demand from cricket boards, including Australia, New Zealand and South Africa. My colleague Bhavya Dua had an exclusive conversation with Cricketshop owner. Let's listen in to this excerpt of this conversation.
And that time of the year is back again when everyone is going to be cheering for Team India and Bleeding Blue, because India is all set to host the ICC World Cup again this year. And we are going to be in talks with the Cricketshop in New Delhi. So Cricketshop in New Delhi is an outlet of the Cricketshop.com, and they supply cricket goods all across the world. And today we have with us Mr. Arvind Prakash, who is the owner of the Cricketshop in New Delhi. We welcome you, Arvind. So my first question to you is, the cricket season is going to start, the World Cup is going to start, right? So how are we seeing the demand from the consumers, like from the cricket fans, like of the different goods for cricket?
Hi, hello everyone. See, as you said, that the cricket season has started, and of course we are hosting the World Cup, so the demand is going to go up, and we are already seeing about 10 to 15% increase in demand with all the cricket goods, especially the bats and the equipment. And as we progress during the World Cup, I'm sure the demand is going to be up by another 15 to 20%.
And when we see these bats being lined up behind us, right, we see bats being signed by different cricket players. There's bats signed by Virat Kohli, there are bats signed by Saurav Ganguly and many more players here. So how do the demands for these such kinds of bat changes? Do kids prefer one bat over the other when the World Cup goes on?
Yes, exactly. Like you said, most of the players these days are endorsing different brands, and it all depends. The demand actually depends on the player's performance. If a particular player is performing well, that particular requirement for his bat or his equipment goes up. So we have bats of various players, and of course, as the players perform, the demand keeps on growing according to their performance. Yes.
Right. And when we talk about these bats and all these balls here and the jerseys, what are you seeing the most demand in? About which particular cricket good is the demand most in as of now?
See, the entire kit is in demand. The people, the players who are playing are going in for the entire equipment. But of course, when you talk about the World Cup per se, the jerseys are the most in demand because, they want to cheer their Team India, and the most popular jersey of Team India is here. And of course, the age group, if you say, that is about 12 to 25, they are looking for the equipment of World Cup.
Well, that's on the World Cup special, but shifting focus on the MPC meet outcome, all eyes will definitely be on the RBI MPC policy meet. As senior economists, they are predicting a no change in the repo rate stance. They are also expecting that the central bank will stick to withdrawal of the accommodation. Ankur is joining in to tell us what to expect from the meet.
Yes, we have arrived at Reserve Bank of India, where in a few minutes from now, RBI Governor Shaktikanta Das will detail the monetary policy, and all eyes will be there. What is his commentary on the liquidity situation? Because remember, in the last policy, there was a surprise element of incremental CRR, which was imposed on banks due to the situation arising from the withdrawal of rupees 2000 notes, and hence it was a targeted liquidity withdrawal program. And later Reserve Bank of India announced that ICRR be taken back in a phased manner. Now it is important to see what is the liquidity situation, especially ahead of the festive season, where banks and NBFCs are expecting a demand and as far as the on-ground situation is concerned. Apart from that, what are GDP and CPI targets, whether or not Reserve Bank of India maintains the target which has been detailed out in the last monetary policy. The expectation last time for FY24 was given 6.5%, and also on the inflation front, the vegetable prices has softened as per the anticipation which was there in the last monetary policy. Although the last month's number were at 6.8%, but it was below the expectation of 7%. But Reserve Bank of India is unlikely to be in the mood of softening its stance on inflation as and when the situation warrants, because it still remains above the comfort range of Reserve Bank of India. From that, there are always other announcements apart from monetary policy in this meeting. So we will be expecting more announcements for banks as well.
Absolutely, Ankur. Thanks so much for taking us through that. But we also managed to catch up with Ed Yardeni, who's the President and Chief Investment Strategist at Yardeni Research, on the rising US yields, and listen into his take on how the global markets are faring and what we can expect going ahead.
Bond market's been the major source of aggravation for equity investors. It's why the stock market's been so weak in September and here in early October. But on the other hand, if it stabilizes, that should lift the stock market and become less of a concern. And I think we may find some stability here, maybe between 4.5% and 5%. I think the drop in oil prices is a very good development in that regard. I think inflation is going to continue to moderate. I think the economy is going to slow, and that should help to lift stock prices in the U.S. And for India, it seems to me that the $5 drop in oil prices is of much greater significance than this decline in the bond yield. And if we get both of them, if the bond yield stabilizes and oil prices remain low, then I think that would be a big positive for India.
And with that, we slip into a short break, but stay put on the show as we will mark the Asian market post the break. Welcome back to the show, and we are on that part of the show where we discuss what's trending on the domestic front. And on to an ET Now news break that has been confirmed. The government has extended SBI Chairman Dinesh Khara's tenure till the end of August next year. And Ankur Mishra, who broke the story, he's joining in with all the details. Over to you, Ankur.
Yes, in line what we reported here at ET Now, government has extended the tenure of current SBI Chairman Dinesh Khara for 10 months. Now this extension has been done for 10 months, keeping in mind the age criteria norms of State Bank of India, which has allowed the extension till August 31, 2024. Remember, Dinesh Kumar Khara has been instrumental in making the State Bank of India over 1% ROA. The bank had posted best ever quarter in the Q1 of the current financial year of over rupees 16,000 crore, and hence it seems that government has rewarded with the extension of term to Dinesh Kumar Khara. Apart from that, there is one more announcement which is made by government. Now the current MD of State Bank of India, Ashwini Kumar Tiwari, has also got an extension, and this extension is there for 2 years. His term was getting fulfilled till January 2024. Now the 2 years extension means that he will get time till January 2026.
Well, that's an ET Now news break confirmed. Let's get a move on then and take a look at Tata Motors JLR Q2 updates. Both wholesale as well as retail sales have seen an uptick on a year-on-year basis. And Shrishti, who tracks this sector closely, is here with all the details. Shrishti, break down these numbers for us, please.
Yes, Tata Motors has come up with its JLR update for the Q2, where we have seen a jump on a wholesale as well as retail sales data. A 4% uptick is what we have seen on both the numbers on a sequential basis. That's actually positive because the company was expecting of a moderation. Why so? Because there was a 2-week plant shutdown which impacted the numbers for the company, but this is an annual 2-week summer plant shutdown, so can't help it. But coming to the cash flow position, then the company going ahead expects that in Q2 JLR is expected to report a positive free cash flow yet again, but this time the number will be £300 million, which will be lower than what the company reported in Q1, which was around £451 million, highest JLR Q1 cash flow on record. So Q2 is expected to see a bit of a moderation, but this too is actually coming in line to what the company has guided before during the earnings season, because in Q1 they said that the Q2 FY24 production and cash flow is expected to be lower than Q1, reflecting the plant shutdown. So the production level hasn't seen much of an impact, although 4% uptick is what we have seen on a quarter-on-quarter basis. Now coming to the order position, that also seen a moderation that was in line to companies' expectation with the kind of improvement in the semiconductor situation. Now the order book stands at 1,68,000 of units, which back then in Q1 was 1,85,000 of units, and 77% of them overall order book consisting of their three top-end high-margin products. So that's the update coming in from Tata Motors JLR division. Numbers coming almost in line to the estimates.
Well, thank you, Srishti, for taking us through the JLR update. But now shifting focus from auto to aviation, the latest coming in is that Indigo Airlines will now charge a fuel charge per sector and the distance the passenger is flying. The fuel charge will help the airline offset the constantly rising aviation turbine fuel ATF prices. And Samir Dixit is here to tell us more on this. Over to you, Samir.
Now, this was very much anticipated, the rise in the turbine fuel prices by the oil companies in the recent past. And now Indigo Airline has taken the big bold step and has announced that the airline is going to introduce a fuel charge effective from 6th of October. This simply means that an additional cost will be levied on the air passengers, and this will result in the rise in air fares for the common man or for the air flyers. Now, this fuel charge will be based on the distance travel. As per the chart shared by the Indigo Airlines, up to 500 kilometers, it is going to be rupees 300. Similarly, for every 500 kilometer travel, the price is going to increase. For example, up to 1,000 kilometers, 500 to 1,000 kilometers, it is going to be rupees 400. And if the distance is above 3,500 kilometers, then the fuel charge is going to be rupees 1,000. So this additional 1,000 is going to be levied on the air ticket, and this simply means that the upcoming festive season, or even if you are planning for traveling through the then you have to shell out to more money. Now, this decision has been taken in the light because if you see, since June this year and up till October, the ATF prices have been raised by around 32%. In the month of October, the prices have raised by around 5%. For September, it was somewhere around 14%. Similarly, the prices have been raised, and this has resulted that the ATF prices in metro cities, whether it be Delhi, Mumbai, Chennai, Kolkata, it has crossed the rupees 1,10,000 mark per kiloliter. And ATF, or the aviation turbine fuel, it constitutes to somewhere around 50% of any airline's operational cost. So Indigo, in its statement, has mentioned that there was no other way but to come up with this fuel charge so as to absorb the extra pressure that was being levied because of this rise in ATF prices. And this fuel charge has been introduced by airline effective 6th of October.
All right, Samir, thanks for all of those details. Let's get a move on then, and let's talk about CRED, because CRED's FY23 financial performance has reflected impressive growth, with total income reaching 1,484 crore, which is a 3.5 increase from the year before that. Notably, losses have decreased by 10%, and this is showcasing a path to profitability as well. CRED has become the 4th largest UPI app in India by value, and my colleague Aishwarya Patil is joining in with all the details and more breakdown on the numbers of CRED. Take it away, Aishwarya.
Credit card and bill payment fintech unicorn CRED today reported its financials. Now, in these numbers, the total income that has grown to 3.5 times to almost 1,484 crores in FY23 as compared to just 422 crores in FY22. Now, losses, that figure has reduced 10% to almost 1,047 crore rupees in FY23 as opposed to 1,167 crores in FY22. Now, the total payment value on the platform, that has risen to 77% to almost 4.4 lakh crore rupees as compared to 2.5 lakh crore rupees in FY22. The added costs in the last financial year was also ESOPs. That cost actually grew to almost 300 crore rupees is what the company is saying. When we talk about transactions that happen on CRED, CRED is now the 4th largest UPI app in India by value. Also gauged by value is the amount of credit card bill payments that happen on the platform is almost 1/3 of the total credit card bill payments in terms of value. Now these two metrics are gauged in value is what Cred has said. In terms of the Cred's user base, the monthly transacting users, that has grown by over 58%, and 90% of the Cred members is what the platform claims. At least one reward point is used by most of its exclusive members every month, and the average monthly.
Well, thank you, Aishwarya, for taking us through Cred's earnings. But with that, let's slip into a short break. But stay put, because we will be discussing on the stocks, potential buzzers on the back of news announcements as well as brokerage notes.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's get a kickstart. Let's get a move on with the show then. And FMCG giants Godrej Consumer and Adani Wilmar have come out with their Q2 operational update. Where is growth headed for these companies? So let's go across to Winnie, who tracks this sector closely to understand this better. Good morning, Winnie. Take it away.
Good morning. And looking at Godrej Consumers first, when you look at the update that has come in this time around, nothing exciting in terms of an update, similar to what we saw in Marico as well. So what we're seeing is weak sales commentary that has come in the Q2 update for the company. Volume growth is slower than what the street was expecting, so that is going to be a concern, especially in terms of growth in home and insecticide business. Now, yes, the company did highlight in terms of healthy constant currency growth in the Indonesia business, GAUM business, so that is what is doing well. But in terms of overall, when you look at it, consolidated revenue at that consolidated level, they're expecting just a mid-single digit volume growth, double-digit constant currency growth, like I mentioned, in terms of sales of the international business. But India business, low single-digit sales growth is what is expected in INR terms. So sales growth, yes, a bit of a concern, a weakness that we're expecting in terms of the volume growth for the company. Though on a year-on-year basis, they're expecting an expansion in terms of margins. Let's not forget that inflationary prices have come down off a bit as well. So that could be something that will support the margins. But in terms of the growth, that is a bit of a concern that the street is watching out for. That is what happened to Marico as well. Now, in terms of Adani Wilmar, on the other hand, has given a very strong operational update compared to GCPL or a Marico, because when you look at it, yes, what they're seeing is rural for them has started seeing a recovery. So that is a bit of a different commentary compared to what we're seeing in terms of the other two companies. Profitability for the quarter, they said that yes, that's a bit under stress. Sales has seen a decline, but FMCG business, they're expecting a growth of 25%. Edible oil business is a mid-single digit growth, that is a 5% growth in edible oil business, and industrial business also volumes are expected to be a 25% growth. So these all volumes are expected to be stronger as well. In terms of food and FMCG, also an 18% growth in terms of volumes. So that is something to watch out for, because rural commentary is stronger compared to the other two peers of the company.
Well, thank you, Winnie, for taking us to the Q2 updates of Godrej Consumer as well as Adani Wilmar. Do keep an eye on these two counters. But shifting focus on Bajaj Finance, they have gone ahead with a 10,000 crore fundraise. But we want to understand the triggers behind this fundraise after almost 4 years, is it? So what are the brokerages making of the move, and what will be the impact of this fundraise on the business going forward? Vamakshi is here with a roundup of everything. Good morning, Vamakshi. Take it away.
Well, yes, Bajaj Finance in focus today. The company did go ahead and approve capital raise of nearly 10,000 odd crores, which includes 8,800 crores through the issuance of QIP and the remaining 1,200 crores via preferential shares allotment. Now, 15.5 lakh warrants as a result will be issued to Bajaj Finserv, which are convertible into an equivalent number of shares. Now, let's assess the probable factors that could be driving the fundraise. Notably, Bajaj Finance Tier 1 capital stands at nearly 23%, and despite being highly capitalized, such a fundraising ahead of time could be attributed to the strong AUM traction that they have been seeing of late. In fact, in the Q2 update that the company reported just a few days earlier, they reported a growth of almost 33% on a year-on-year basis. Apart from that, the company could also be gearing up for facing new competition in this space. Apart from that, when we look at the impact of the fundraise on the company's fundamentals, it could lead to a dilution of nearly 2 to 3% as per brokerages, and as per our own calculations, the book value per share could rise by almost 15%. A slight decline in return on equity is expected, but the return on equity is expected to still be above the 20% mark, which is one of the best return on equity in the NBFC space. So given those factors, we do have Bajaj Finance in focus as of now, and definitely keep an eye out on this counter.
Shri, for taking us through that. Bajaj Finance will definitely be in focus today. But moving on to metals, metals also will be in focus. Almost the entire pack will be in focus because of a report coming in from Macquarie. They have a positive outlook on metals because they say that steel companies are likely to benefit from the steel demand as well as the strength in the domestic prices. They have upgraded the target price for most of the metals companies by almost 25 to 45%, and JSPL that has got the highest upgrade. They have upgraded it to outperform from neutral. They have hiked the target price to 808 per share from 557 earlier. That's almost a 45% hike. Moving on to JSW Steel, they have downgraded it to neutral from outperform. They have hiked the target price to rupees 841 from 641 earlier, a 31% hike. Tata Steel also, the price has been hiked by 26% to 151, maintaining an outperform on both Hindalco as well as Coal India. The target price has been hiked to 562 for Hindalco and Coal India to 322. And on Hindalco, they have said that given the steady global downstream as well as solid domestic upstream business, they are positive on that. And also on Coal India, the healthy dividend yield as well as steady earnings, that is likely to support Coal India well. So metals will definitely be in focus, and keep an eye on this counter.
Well, absolutely, Lisa. Metals are going to be in focus today on the back of that note coming from Macquarie. But with that, we're joined in the studio by my colleague Ansh. And Ansh, take us through what the F&O snapshot looks like. We managed to end above those 19,500 levels yesterday. So tell us what the setup is like today.
Sure. So Nifty gave a good pullback, as you said, but however, index seems to have approached 19,600, 650 level, which is a strong resistance where 50 DMA also lies. Let's see what happened in F&O segment now. Long build-up was seen in Nifty futures after a long time, with open interest increasing by 6%. This indicates that bulls are finally coming into shape. Whereas on option front, we saw put writing at 19,500, indicating good support here, and call buying at 19,600, indicating traders expecting Nifty to go above this level. Let's see what FIS did. In cash market, they had been net seller for 12th consecutive session, which has been the longest streak in over 8 months. This could also be seen as a positive sign on a contrary basis, like the sellers are getting exhausted. In index futures, they added 1.7 thousand long contracts and covered 2,200 short contracts. So we saw a net increase of 4,000 contracts on upside. On option front, we are seeing net call of minus 1.3 lakh contracts and net put of minus 1 lakh contracts, which in value terms is over 69,000. This is the highest selling seen in over 5 years. This indicates that option traders are expecting a range-bound trade here. So in a nutshell, Nifty looks range-bound movement with 19,600, 650 as the resistance, which when broken decisively on closing basis can give an upside of a good up move to 19,800, 850 level.
Well, thank you, Ansh, for taking us through the F&O snapshot. But with that, it's time to wrap up on this edition of Market Cafe. But stay put on the channel as we catch all the action on our upcoming show, The Market.